That's right, folks. This is On the Money, the multicast with Ryan Wheelis, financial advisor, founder of Allied Wealth. I'm your host, Spike Spangle. We got a full hour of radio if you're listening to us here, so don't go anywhere. If you're watching us on the YouTube, keep clicking on each one of the videos. We'll go through the entire hour-long radio broadcast. Ryan Wheelis, we know there's a lot going on right now. There has been an inauguration. We got the new administration in. I also want to go back, though, from a couple of weeks ago, some devastation that's happening across the country, just a little ways away over on the west side. Reminds me a little bit of the hurricanes that happened on the East Coast a little while ago. A lot of different perspectives. But first of all, how you doing this week? What's going on with you?
Spike, I am well. I am usually a pretty candid person, so I believe that America is great again, for sure.
As we see things that happen like wildfires, hurricanes in Florida, we might not think that they affect us in places like Texas. But insurance is a pool, and we've noticed and seen how the large insurance carriers over the last year or two haven't been offering as much insurance on brand new homes or on this devastation insurance, things like hurricanes in Florida and wildfires in California. I'm wondering if there will be any sort of spillover effect to the costs of insurance here in Texas. What do you think?
Well, Spike, there certainly can be. I mean, in Texas, in the Houston area especially, we deal a lot with windstorm. And windstorm insurance is if you're in a hurricane-affected area or tropical storm-affected area, you have to pay windstorm insurance, and it can be quite expensive. And I do believe that, as you say, risk is pooled in insurance pools, and there certainly could be some spillover from California as well. And that could cause, people's premiums across the country to go up.
Yeah, well, that's what I'm concerned about, because I think folks think going into retirement, hopefully if they're close to paying off the mortgage or they actually do pay off the mortgage, they say, oh, well, my costs are going to go down in retirement. I won't need as much as during my working years. Hopefully the grown-up kids are taking care of themselves. But we're noticing that certain costs aren't as fixed. Myself personally, I never used to think of the home insurance as a cost that could change on me over time unless a tree fell on my house and I made a claim against the insurance. But now we're seeing insurance rates rise in different areas around the country. And in Texas, our retirees consider home insurance a fixed cost?
It's no. The answer is no, okay. Because insurance can go up on these bikes. So it's one of these things where if you're trying to factor that into a budget and make it a fixed cost, I don't think you should in any means, because it can go up. And like you said, if you have a claim, it probably will go up. So it's one of these areas of navigation, right? Because technically, when you get to retirement, you go on to a fixed income in a world of cost that aren't fixed, right? So it's something you most certainly have to navigate. I'm a big fan, Spike, of simplifying living once you get to retirement. I know a lot of my clients have the house that they raised the kids in still, and they've got 3 bedrooms upstairs that they have not been in 2 years. Yeah. And so simplifying life, I had this client, I've told the story to you before, Albert, who's since passed on. But he had a home in Katy, Texas. Him and his wife, he was a military guy. You could eat off the floors in this house. It was very well kept up. The yard was immaculate, had a nice pool, nice garden in the backyard, whole 9 yards. But when Albert retired, he decided he was going to sell his house. And I was surprised that he did that. And him and his wife went and rented a unit in a very nice new condo building, and they loved it. He said, Ryan, I will never forget the first time a light bulb went out. I was actually going to the store to go get a light bulb. And I went downstairs past the front desk, and I'm very friendly with the lady there at the front desk. And she asked me where I was going, and I told her I'm going to the store to get a light bulb. She says, Albert, I'm sorry, you just need to call the maintenance man. And he's like, what? And she's like, yeah, the maintenance man will come and put a new light bulb in your unit for you. He's like, oh, okay. This is awesome, right? And it really simplified living. And so he was able to go and travel and do all the things that he wanted to do. And when he left, he would just lock the door and leave and didn't have to worry about the sprinkler system or maintenance or the roof or the hot water heater or the dishwasher or any of that stuff, because it was all taken care of for him. in the event that some maintenance was needed, down to a light bulb being changed. So Spike, it just all goes back to having a plan.
Yeah.
And I think the cost of housing should absolutely be factored into your plan. And my team of certified financial planners is standing by right now to do your proper written comprehensive retirement plan for you. And all you got to do right now to get that plan for free, by the way, is text the word plan. That's PLAN to the number 21,000. And in that plan, we will talk about how to address your housing expenses. And as Spike says, I don't believe housing expenses are fixed in any capacity. I think they will go up over time.
What this also from the insurance industry is reminding me a little bit of is about 15 years ago when people would come to live events, they would come sometimes with their statements and say, hey, I've got this long-term care policy. They just sent me a notification that they were going to double what my monthly costs are or even triple.
Well,
and I think the insurance industry valued, hey, we're living longer, so we didn't price this correct.
Well, the letter would say you can pay more to keep your same coverage, or you can keep paying what you're paying and accept a lower per day benefit. And we've seen thousands of those letters over the years, by the way. And you're correct in the sense that long-term care insurance, the actuarial teams at the insurance carriers who price out the cost of these products have found that they can't price them because people are living longer than they ever expected.
Yeah.
And that's really interesting to me, Spike, because, the biggest fear that any pre-retiree has and any retiree has is outliving their income streams and their money. All right. Mm-hmm. Yet we're in a world where people are living so long, these very, very intelligent people who are actuarial teams at these insurance companies can't price long-term care insurance because people are living so long. And folks, I got news for you. Your generation is going to live longer than any generation in history. Spike and I have told a story about a lady in Austin, Texas. I believe the mom was
116, and she was living with her very young, sprightly daughter of 94 years old.
Yeah, I mean, just that's right here in Austin. So 94 and 116 years of age. So Spike, it all goes back to proper planning, right? I mean, that's what it comes down to. And I believe very strongly that retirement is not necessarily about how much net worth you have. Retirement is all about income. And when I mean income, I mean income sources that come into your mailbox, your checking account each month, and they're there, and you can depend on them. And they come in like clockwork. They come in regardless if the stock market's down or up, if the bond market's down or up, regardless of who's in the White House, regardless of wars going on across the world or whatever bad things can happen, regardless of hurricanes or snowstorms, the money is in your account every single month. And Spike, having that as part of your overall plan really allows you to have peace of mind in your golden years. And, a lot of folks are missing that opportunity because maybe they don't understand their options that are out there available to them in full. And that's why we offer our planning process done by my team of certified financial planners, which the listeners can get right now by texting the word plan to the number 21,000. So pull out your cell phone, go to the little text box, hit the number there, type in 21,000, that's 21000, and then text the word plan. And my team is going to reach out to you to get some information. And to do that plan for you, we need to know some things about you. I don't need to know your account numbers. I don't need to know your address, okay? But I need to know your birth date. How old are you? How much longer are you going to work? What are you working with? What are you contributing to retirement accounts? Do you have a pension? What does your Social Security statements look like? What's the estimate show? What's your family's health history? What's your health condition, right? Do you have TRS? Do you have a pension? I think I already said that. Do you have Roth IRAs? Do you have a tax strategy? Do you have a legacy plan? What are you going to do about healthcare and retirement? We need to know all these things in order for my team of certified financial planners to build for you your certified financial plan. And to get that, Spike, is really easy. All folks have to do is text the word plan to the number 21,000.
If you're unfamiliar with doing that, I'll also, just for our radio listeners, give out that phone number. You can call 844-944-7555. We have people standing by right now. They'll schedule that appointment for you. You can use the text feature, or if you want to, you can learn more about the team just by going to retirenowhouston.com. That's retirenowhouston.com. Ryan is doing a little coughing there. He's going to take a sip of water. We're going to take a commercial break here on the radio. We're going to be right back. If you're watching us on the YouTube channel, click on the next video. We're going to talk more about your income planning in retirement.